Okay, let's take a look at this. These are the reasons why real estate must rise in price. A lot of people are saying real estate will never rise. People can't qualify for loans without jobs. People are saying that all the jobs are going to China. People are saying we're going to have hyperinflation and the economy is going to collapse. But I really think that the right numbers to look at are these numbers. Is that the descendants of the baby boomers are 87 million strong. And people, they look at Japan and they say, well, Japan went into this big deflationary, decades of deflation, and that's going to happen to America. But really, Japan's population went down. And the U.S. population, since this recession started, has gone up 20 million people. Because 2.5 million people live in a residence on the average, we should have built 8 million homes, but we've only built 4 million homes. So actually, we're underbuilt. We're actually going from overbuilt in 2006 to underbuilt in the second half of this decade. Another thing to look at is that these children of the baby boomers, they're buying about 1 million new homes per year. 500,000 are new construction, and 500,000 are foreclosure sales. Well, at the rate they're selling off foreclosures, at the end of 2015, they sell off the last foreclosure. So in 2016, you have 1 million, the descendants of the baby boomers are buying 1 million new homes, but there's only 500,000 being produced. So that 1 million people trying to buy 500,000 new homes will bid prices up. Now, the big event that I see, the really, really big event, is that the banks and businesses have hoarded $8 trillion of cash. The banks about $2 trillion, the businesses about $6 trillion, and they've been afraid to loan because of government fallout, government backlash, and the government questioning them about telling them to not make questionable loans and penalties and things like that. Well, the really startling thing about that is that there's only $1.23 trillion of cash in circulation. So this means that any little change in the sentiment towards lending and prices could easily double, triple, quadruple in price. And so people say, well, the banks and businesses aren't going to loan all of their cash. Maybe they'll loan half of it. And that would be like a 4 times price jump. But if the interest rates go up, if real estate goes up, the government will raise rates to try and slow down inflation. And they'll have to pay a higher interest on the deficit. And I estimate at least $4 trillion in debt payments will be made. You add that to $4 trillion in cash that'll be loaned, and prices could easily jump 8 times in price, very easily, like what it did in the 70s and the 80s. And so I see these 3 events as repeating. From 1966 through 75, we had a 9-year recession in housing, and the population continued to grow, and banks and businesses were hoarding cash. When they sold off the last foreclosure in 75, then we had massive inflation. In my area, the real estate went up 8 times in price after that. It quadrupled in price in all of California in only 5 years, the end of the second half of the 70s. And that's very, very likely to happen again because of these reasons. The banks and businesses will say, why are we holding on to all this cash when there aren't any more foreclosures? And interest rates are, let's say interest rates go to 6%, they'll want to loan the money to get the 6%. They won't want to just let $8 trillion in cash sit there and be deflated with inflation. They'll want to loan it. So as they loan it, and as the government has to pay interest on the debt, then that will, on the deficit, that money injected in the economy will cause inflation, and a 2, 3, 4, or even more times jump in real estate is actually very plausible. Some people say, inflation is too mild. This will never happen. And then you have other people on the other end of the extreme. They're saying, oh, we're going to have hyperinflation, prices, the entire economy is going to collapse, and real estate prices will go to 0. Well, I think that both of those are extremes. I'm kind of in the middle. A 2, 3, 4, and up to an 8 times price jump is I'm actually in the middle. So let's try and look at the real numbers and decide, is this very plausible? This is very plausible. It's happened in the past. It's happening right now. And after 2015, we should have an inflationary upleg where real estate and food and gasoline, transportation, salaries, housing, they all, go up factors of 2, 3, 4. They should all jump in price. That would be very good for silver and gold, which should do very well the second half of this decade. I hope you like this video. Have a nice day. Bye-bye.